All right, guys. Welcome to Hurley Investments Trade Findings and Adjustments for Tuesday, April 9th. I'm assuming you can hear me right off the bat. Go ahead and give me a thumbs up, a yes, a something in your comments and questions. Good. Looks like it's working. And I had a little trouble last time with audio, so I think I've got the solution this time, so let me know if anything sounds weird. But let's get started. Looks like everything's good. I'm going to adjust the date here. Oops. All righty. All right, guys, my name's Keith Bybee. It's a pleasure to be with you tonight at the evening Tuesday trade findings and adjustments. As I was looking over some things for ideas today, I'll jump right into it. And I've been looking at Disney. I talked about this one with a friend of mine a couple weeks ago, right when it was hitting the 108 area, and thought, man, that's a good place to be getting in. Unfortunately, we're 2 weeks down the road and we're way up at 116, almost 117. But in spite of that, you can kind of see this range that it's gone through from all the way up to 118 and kind of traded around this 110, 108 area for quite some time. So what makes it different this time around? Does anybody, I know Kevin has talked about Disney quite a few times and has mentioned it and discussed it over the last few years. Just to give you guys a chance to talk about it if you have questions or whatnot. Let me ask you a question. So what do you think coming up is going to be a good money maker for Disney? Just as far as news, as far as how Disney makes their money, what have you heard that's coming up or that you might guess that could be a big money maker for Disney? Not getting any answers yet, guys. Come on, take a guess. Can you think of anything that could possibly help Disney go up? Mod says break out of a wedge. So yeah, looking at just the chart, technically it's is technically breaking out. We do have a wedge pattern there, a point of resistance. Yeah, that I like this FinBiz site. Sometimes it's free, has all this great fundamental numbers all kind of plotted out down here at the bottom, and has a bunch of news stuff. But I thought it would be easier just to pull this up just because they have all this charting already on it, and that looks pretty and nice. So why not? Perfect. And we've got some more comments. Stuart says, movies this summer. Rich says, aren't they getting into some streaming process? Yes, so all of the above, guys. And those are fantastic comments. Let me list those. All right, so and I'm going to say due for a breakout as it's broken above the 115. Perfect. Technically due for a breakout. Obviously, our next stop here is this line up at 118. But seeing it travel around this 115 area and getting knocked down most recently, it's a pretty good sign in my eyes that it's held above 150 and kind of slammed right through it in the last few days. So that gives me a lot of optimism. Some of the news coming out, we mentioned movies this summer. And the big one is actually in May. The big Avengers Endgame, where we find out how the Avengers fight back against Thanos. Some of the news just the last couple days has been that pre-orders for tickets for this show in particular have been ramping up quite big. It could be one of the biggest movies ever, but most certainly of the last little while, that's for sure. The big movie, they will most certainly make billions, and that is a good sign news-wise coming up. And then Rich said getting into streaming services. This is true. And it's called Disney Plus, and that's supposed to come out sometime this year. So it's not necessarily something that's necessarily going to boost our next few weeks, but it is something that I think is a great thing that Disney is doing to gain market share. And with their acquisition of Fox, they have more content. I'm going to say content instead of brands. That makes more sense. And possibly take some market share away from Netflix. But I think what really is going to happen is most people are going to have all of them. I have Netflix. I I have a 3-year-old that watches shows, Disney stuff, and I'm probably just going to buy that one as well. So I think a lot of people are most likely in the same frame of mind, and we'll probably be adding some of these streaming, more of these new streaming apps coming out, just because you can kind of replace a lot of the cable with it. So that's what I like about it. Trying to think of what else. Just as a quick recap, the reason it had fallen back a couple weeks ago, right over here, was because of their official acquisition of Fox. And even though there was news of this and everybody knew this was happening months ago, when it officially happened, for some reason, that's dropped within a few days, all the way from 115 all the way down to 108. So it was way overblown then, but it is cool to see it kind of come roaring back. And I do think we're due for a breakout. The other reason, I would say, and add to your guys, is a pre-earnings run. We have earnings on May 8th. So those are our reasons. How are we going to trade? I'm going to come over here to our E-Trade platform. I was looking at May monthly, but we can do the same thing for the same price and have another week out to May 24th. And so it didn't really make a lot of sense to go with May monthlies. Something just as an FYI, because they acquired Fox, the stock of Fox has their own options, and they kind of have to do both of them together. You'll see these orange May expiration and the April orange ones. Those are for those people who had Fox stock beforehand, those are the options they're going to go with. Obviously, if you're not on E-Trade, if you're on a different platform, it'll have something else. But just so you know, heads up, and it's going to say something like this, and the prices for the Fox is going to be around 55, closer there. This Disney is going to be up at 115, 120, where it's trading, obviously. But just as a heads up, don't get that confused and don't buy options for Fox. And I never finished my thought there. Fox, the reason why it had dropped was because people thought that it diluted shares of Disney, which in reality is just a zero-sum game, because Disney also acquired more assets. So it was kind of a dumb reason for it to drop. But I'm looking at, you could do a 115. I'm going to go over here to the calls because we're looking for a bullish bull call. 45 days for a May 24th. I would assume we'd get out much sooner than that, but just to have more time, I would go to May 24th as opposed to May monthlies, because if you did a 115 buy and a 120 sell call option. You're about $2.50 at these prices, and it's the same for May. About 250. So why not have more time? You have less decay if it gets closer into May, right? So why not have more time? And then just check out the snapshot analysis. Risk to reward is one risk for one reward, pretty even. Our break even is 117.50, this price over here. And I would look at, obviously it's always something to consider. I'd rather getting out if it's profitable, even if it's just a little profit. It never hurts. But I would say closer to 118 at least, because that's its next resistance level. I would bet that it's with how fast it's come back and how fast it broke 115. There's a pretty good chance it could keep going higher from there. But since it is a shorter term, month out a month or so, a little over a month and a half, I guess is more accurate. I would say don't hesitate to take a profit if it gets closer to 118. But that's what I would do. Let me go ahead and jot that down, and let's just work the numbers real quick. Actually, guys, while I'm thinking about it, let me just look at 116. That's a little cheaper, closer to $2 net between your selling the 120 strike. It doesn't give you a ton more. Yeah, a reward of 108. I mean, it's not a ton more, but it is a little cheaper. Closer to the money, that might work even better. Obviously, there's nothing wrong with the other one, but since I'm thinking about it, it makes sense. If you are wanting to take a little less risk, you could do 118. Yikes, that's not correct. Things wrong. There we go. That brings your break even down to 117 if you cap it at 118. But I kind of like 120. Gives you a little more room. If it really takes off, about $2. I'm actually going to the lower end on those. You could actually go like 145 as a midpoint. Obviously, this all changes tomorrow when the market's open, obviously, but just to give you an idea, something like that. So a 1-to-1 reward. And what are the break even? Say, let's just cheat here. 2 and 16 and 20. So 117.92. So break even price of the stock. All right, guys. Any questions, thoughts, concerns, or other ideas? So one thought I had was even doing a leap long call as an alternative. Disney has been beat up for such a long time because of their issues with ESPN, their ESPN app not making tons of money, their ESPN, I guess, across the board. But it represents such a small part of their overall lineup of money making assets, and just has been kind of a what's the expression? The dirty stepchild of the stock market. So looking at leap long calls, I'm clear out to January, and looking at 120s, $7 is not terrible. You know, a little further in the money, kind of don't like that as much. If you were looking to go out further in time, 120 January of 2020 is what I would go for. And for all the same reasons that we've listed above. That's just another option, and around $7. So some of the thinking behind that one is just going back to actually Visa. If you guys remember, and as companies go, they're, obviously they're not similar in any way, but the thinking behind going further out is just the same as when we did this Visa leap long call, which we got in for 17 and is looking good. That was after seeing Visa hit 150, pulled back, bounced right up, slammed through 150 again, and you could actually say 145. If I look back here, got above 145, went up to 150 and bounced right off it and went up again. And that one looked great. Typically, it makes more sense, in all honesty, to, get in down here or here or, whatever. But we're not there. And nothing's really changed other than the fact that it's finally, in the same way Disney is, Visa was, getting a little more attention and getting a little more market favor, it looks like anyway, for the stock to move up. I mean, it's kind of crazy that it hadn't rather really taken off, making billions of dollars, making billions on movies every year, in Disney. Sorry, I keep switching back and forth, but man, they've just been doing so well. Yeah, they've had issues with certain things, but every company has, and they deal with it. They find ways to make it work and make things profitable. That's what good businesses do with parts of the business that aren't doing well. They make it better. And so, getting off track, it's just another option to consider. Go back to Disney. It has looked good. Breaking above that, I would like to see it really take off above 118 as well. And that's really the only headwind, is 118. So if it doesn't do that, what is our hedge? We have 120 short calls for this option. Where if it goes down, maybe you'd see it hit 110 and bounce up. If it came back down, hit 110 or tested 115, which is the more likely scenario, then you can roll down the short call, close it for a profit. There's a number of things you can do. So that's what I like about that one. And of course, what I like about the leap long call is you've got time. You've got time out to January. Obviously, you would want things to happen sooner than that. And obviously, I would suggest if it does get up rather quick, don't hesitate to book a profit. I'm really looking kind of more towards this pre-earnings run. Of course, the rest of this stuff, but I think we're in for a decent pre-earnings run. There's a lot of optimism with it, and I would be looking to get out most likely if it was nicely profitable before earnings. And let me put the earnings date on there. Oops. May 8th, confirmed after market close is our earnings date right here. And that's all I got. Sorry, guys, just getting back to your questions. Stuart, a credit trade, bull put. We can look at that. Give me just a second. I'm sorry, I'm not sure why you're not seeing that. Market price for Disney is around 116 right now. And break even, are you able to see that now, Ida? Break even, if you don't, is if you did the 116 to 120 May 24th full call would be 117.92. And Stuart, let me look at a bull put real quick. Actually, I'm going to go towards the May 8th. Excuse me, May monthly, not May 8th. Bull put gives us more time decay. So you could rather do a 115, 110 bull put where your short option would be at 115. That gives you a buffer from the current price up at 116 and of course a point of support at 115. And your hedging option at 110, which is the next lowest strike, that puts you at a cost basis of 143. Let's see what that gives us. It's not bad. That is certainly something you could do. You're looking more at it expiring worthless, or I guess what I'm trying to say is you're probably going to have to see it lead off pretty nicely closer to May 8th, and Stuart, it's not a bad idea. I prefer debit spreads. is, I guess, really the only reason I go that way. There is a good chance that it will end and expire worthless above 115, so it's not a bad one. But that one, I think I'd leave up to you. Just looking at profit and loss, if you did get up to 118, this is on 10 contracts. The E-Trade automatically just puts it there for whatever reason, but I would suggest being more conservative, depending on your portfolio. And, you got a couple $100 if it gets up to 118. So close it for a profit, not a bad idea. So of course, there's that option too. I just kind of prefer debit spreads from my experience. And more out of the money. Let's see. The money, we could go. Stuart, are you suggesting out of the money further down? That gives us a 66, 65 cent cost basis. Excuse me, credit, not cost basis. That doesn't look bad. You can get it can fall all the way down to 109. You've got a 115 support level, a 110 support level. That's not a bad one either. Again, that is 110, 105. Right, Stuart, are you saying it gives you a 10% buffer? Gotcha. Yeah. So that looks pretty good. I would totally go for that too. I'll go ahead and throw that in because it makes perfect sense and it's totally doable as well. Sorry guys, just getting my windows set up here. I like it. I will just go ahead and do a midpoint of around 66 cents. All right. I like it. Guys, I think that's it. Oh, thanks for catching. Stuart, I put calls. These are puts. Good catch. 10 points for you. Good eye. Perfect. And I put bear put. Gosh. Bull put. 110, 105 bull put. Perfect. All right, guys. There it is. There's some options for you. Any of them are good. If you're wanting to be more of a stock replacement and more time and try and capture more upside, obviously go with January 2020 leap long calls. If you like bull calls as opposed to bull puts, then go with option A. And if you like credit spreads, go with option C. All right, perfect. Thanks, guys. I think that's it for me. You're welcome, Stuart. I will not be doing the webinar Thursday. Kevin will be back. He had to watch a son play a soccer tournament today. That's why I was here. It has been wonderful to be with you guys, and you take it easy. Good luck tomorrow putting this one on, and hopefully we'll come around and see what happens in the next couple of days, and hopefully we'll make some money on it. Thanks, guys. I will talk to you later.